commentary coming through from Fed officials as well. So just taking that chance of a November rate hike off the table. But still, historically speaking, the 10-year at this level is still attractive to some in the market. Let's change on and just talk about one of those calls that's come through. This is from PIMCO, and essentially they're saying that we're entering an era now of extremely attractive fixed income returns. So they're liking this space over the coming 6 to 12 months. Now, the reason they're saying that is because they're actually a little bit more bearish on the outlook for the US economy. And Paul, they say the Fed will need to start cutting rates sooner rather than later. Also, inflation and growth, those have hit the peak as well.
Bell, we've had a few days off from this conversation, but here we are again, the yen knocking on the door of 150. What's happening?
Yeah, that's right, Paul. Yeah, the moves in the yen, of course, we did really monitor it as it approached that 150. Then we had question marks over whether the Japanese government had intervened, whether they're just been doing a bit of a rate check with some of the banks. We're still not clear exactly on what happened there, but we did touch that 150 level. We started to move off it, came back down to around the 147, 146 mark. But yes, once again, we are pushing back toward 150. Why? Well, it is still a yield gap story between the Fed and the BOJ. But if you change on now, Mizuho is saying that the yen could weaken even further. They're looking at 155 for the Japanese currency by the end of March against the greenback. And their view on that really comes down to the Fed. They do actually expect them to stick with rates higher and longer. So, of course, that's another analysis that's still shaping up in the market. A lot of other people are really sticking with that view, Sherry.
Right, Bell, and of course those rates higher really leading
A lot of
to
people
more
sticking
debt
with that view.
distress among emerging economies. Debt relief in focus at the IMF World Bank meetings in Morocco. But sources tell us that closely watched talks set for Thursday are unlikely to produce any breakthroughs on how to level the playing field among lenders when governments default. Bloomberg's Jennifer Zawasaja reports from Marrakesh.
We are here on the ground here in Marrakesh for the ongoing IMF World Bank meetings. On Wednesday, we heard from a number of finance chiefs, in particular hearing from U.S. Treasury Secretary Janet Yellen talking about how she is hopeful for progress on talks with China. She will meet with the China PBOC governor later this week. Also, a number of leaders here fielding questions about how the Israel-Hamas war potentially can affect their own economies, potentially affecting oil prices, inflation, and their volatile currencies. Coming up, we're going to pay close attention to how debt talks are going with a number of countries in the global south. In particular, we're paying close attention to Zambia and their discussions with the IMF. On Wednesday, we heard about a deal being struck between Sri Lanka and China on their debt talks, and so we'll see whether or not there's any more progress on that front. And just moving forward, because this is the first IMF World Bank meetings that is happening in Africa in 50 years, a lot of attention is being paid to what African leaders are calling for.